Hey guys, Scott from Edge Lending Solutions. I hope you're all well. So tomorrow the RBA sits, they sit on the first Tuesday of every month, and they decide what the overnight cash rate is going to be. Around about the same time this year, the US Fed is meeting on the 1st of November as well. So we put out a video, only a few days ago, which was explaining about, when people come to me and say, Scott, what's happening to the interest rates? What are they doing? We were saying, look, no one can predict the future, and we actually don't know. What we can do is understand and follow a trend. However, we're going to put a bit of a call out, a bit of a punt out, a bit of a bet out, and look, it's a bit of an educated guess, and we've been getting a little bit of sneaky mail from the US that the US Fed on the 1st or the 2nd of November is going to raise their interest rate, their overnight cash rate, by 0.75, and then again on the 14th or 15th of December by 0.5. So to me, that is actually going to be instructive of what our RBA bank is going to do. They're definitely going to raise in November, Melbourne Cup Day generally, and they're probably definitely going to raise again in December. So we're just talking about how much, because that's the trend. That's the trend. If we don't follow the US Fed in some fashion, then our currency will drop through the floor. And as much as everyone used to say, oh, it's good for exporters, you know what, there's probably only a dozen exporters. The other 25 million people in Australia are going to hurt really badly if our dollar goes to 55 cents, because every item that you buy from the grocery store is imported and they go up in price. Fuel is imported, they go up in price as well. So that's why I think the RBA is going to have to actually protect the currency. And it actually makes sense if you actually look at what's happening around the world. There is, as part of all the wars, the economic wars that are actually going on, and I actually mean wars, there's a very large currency war that the US bank, the US Fed is really putting out there, and they're using inflation as a cover. And so we're going to just have to follow. It's sad that nothing about our economy is what the RBA is going to have to really focus on. They're going to pretend to, but at the end of the day, they're happy to have the unemployment increase. They're happy to have businesses decrease. Like they want businesses will be going under, because that's actually what slowing the economy means. It actually means that people are out of work, and so they stop spending, and that's the spiral that they're looking for. But again, I don't see how an extra 1% on interest rates is going to bring any new oil or gas out of the ground, which is actually what's causing inflation. So take it with a grain of salt about why they're raising interest rates. Actually, it's irrelevant. Look, they tell you one thing, it's really about another. The fact is that it's increasing. So I guess I'm punting then for our first raise in November, maybe 0.5 from the RBA, and then a Christmas present of a 0.25. Maybe nothing in January, then maybe a big one in February as a bit of a, Australia, you spent too much on your credit cards over Christmas. We told you to stop spending. You went out and spent record amounts anyway, so we're going to have to raise your interest rates again, because you just won't learn. You just won't listen. That's my prediction, actually. That'll be it's all your fault. Look over here. Nothing to do that we just follow what the US is doing, or the Bank of International Settlements. So knowing that we think, look, this is definitely the trend. Wow, whether it's 0.5 or 0.25 in a couple in a row, it's kind of irrelevant. I'm imploring people to understand, and I've been saying this for a while, every time the rates go up, your borrowing power goes down by between $50,000 and $80,000, depending on your family makeup. If this means that you then go to refinance and you cannot pass the calculator anymore, then you're stuck with your bank, and your bank is just going to keep doing this. There'll be other lenders that are here, like down a bit, maybe 1% under, they'll increase as well, but they're lower, right? You won't be able to go and apply for these because the RBA rate's higher. You don't work on the calculator anymore, and clients are starting to find this out. Generally, the borrowing power from our clients has dropped $200,000 of borrowing power since March, and it's going to get a little bit more. So, guys, this is not the time to dilly-dally. I know Christmas is coming up. If you're thinking, oh, well, I'll get Christmas out of the road, and in February or March, I'll go and refinance, and I must get around to refinancing down to a lower rate, will be too late. Do not wait. You have to try this now. It is going to be painful. Refinancing with banks is painful at the moment. It is going to be Christmas time. You have to do it. Please start. Look, otherwise, accept that you are a mortgage prisoner with your bank, and you probably won't be able to refinance for another 2-3 years. unless something changes in the system. All right, look, that's it for me. A couple of predictions on the rates. We normally don't make predictions, but I'm feeling okay about this one. I thought I'd throw it out there and punt it, but also a call out. I'm imploring everyone, if you are looking at refinancing, do it now. Don't wait till after Christmas. I think it definitely will be too late for some people. All right, that's enough from me, guys. Remember, life is a family sport. Give yours an edge. See ya.